We are live.
Wow, fantastic. I can't believe it. It's Tuesday night, everyone. And surprise, surprise,
Surprise!
we are your special guest hosts for this evening. Welcome to the Tactical Tuesday. And tonight we're doing our session on private lending. It's going to be an amazing panel. We've got some fantastic panelists. We're going to do a little bit of a round table session, Q&A. But let's just take a moment and introduce ourselves. Who are we, hun?
We are Ray and Joe of BV & Co. Some of you may know us, some of you may not. We're completely honored to be here, standing in for Corey and Tiff. Oh, yay, now we can see the chat. That's great.
Thank goodness, people are here.
That's awesome. Hi, Kenya and Angie. So we are sort of family-run real estate investing team. We have been in the business now 3 years, maybe. We specialize in multi-units. We also specialize in new build construction projects. And we're part of the Ignited family, and we're just really thrilled to be here.
We are. We've been Ignited members for a little more than a year and a half. We joined at the end of 2019, and just a little bit more about us as people log on. And it's so great to see everyone. Thanks for making comments. It's fantastic to see people showing up. So in 2019, we were at the struggle point, and we joined the Fearless Ignited.
Lift your face.
Oh, right there. Sorry. We joined the Fearless Ignited community, and it really gave us the tools to be able to move ourselves forward. So fast forward to 2020, we had just one property. It was a duplex. And within 10 months, we were able to ladder ourselves up to 8 properties for a total of 55 doors. So that was us a little bit. And then going into tonight's session, Joe and I are the kind of people, we like to do a lot all at the same time.
We do. We kind of overload ourselves a little bit and hit the ground running, but it works for us, so that's fine.
So our big kind of sizzle point is at the start of this year, we needed to do a money raise, and we raised a little over $2 million in just under 45 days. So we feel that we've got some qualifications to be able to moderate tonight's session in terms of private lending, and we've got some great panelists. And I see that we've got so many awesome people friendly joining. Faces that are joining tonight. It's great to see everyone, and thanks for the shout outs, guys. Thanks for the support. We're really happy to be here.
And we do. We've got an awesome panel of Ignited members that have all done different varying aspects of private lending, that use private lending in their business. And I think everyone here brings a little bit of a different perspective to it, and they come at it from a different point of view. So, one of the things that I think we struggled with, there's Nin, hi. When we first started is that feeling of what's the term? Not self-worth, but are we worthy enough are we actually able to raise money? It felt so like, oh, that's for the big dogs. I don't know how to do that. That's not really for us. And it just took a little bit of time and a little bit of education and surrounding ourselves with the right people to learn that this is something that I think anybody and everybody can do as part of your business. And it is a hugely valuable tool in order to grow your business, right? Because for us, we had our first property and we thought, well, this is amazing. We love it. It's chugging along, but now what? We're kind of out of money. So what do we do now? And when we realized that private lending was actually something that we could do to actually move our business forward, it was like so many doors opened. So that's really kind of what we want to talk about a little bit today, understand where everybody came from in terms of their journey into private lending, but then also talk through some of the actual logistics, like how does it actually work? So those are the things.
Great points, honey. Great points. Thanks. And I had a couple of things as we were chatting right there. I'm like, yes, but it really is, right? The world of private lending, it's the stuff that we're not taught in schools. It's the information that we learn in great communities like this. And it really does unlock a tremendous amount of opportunities for you to be able to grow your business, to be able to grow your portfolio, to be able to advance yourselves. And once you kind of get rolling with this, once you understand the mechanics of this, and you've built some trust, and you've done well by those investors and those people who have lent money to you, it becomes a lot of fun. And we're kind of at that stage now where we're having a lot of our investors, and they've been pleased with the investments. They're getting great returns. And it's now, what's coming up next kind of thing. So that gets exciting because you're like, well, where's the ceiling here now? Like, how much can we actually do? So for us, we're still exploring what that actually means and what that ceiling is all about. But as Joe said, we started off with a lot of fear, a lot of nervousness and trepidation about even lending our money out. And then really the question of, do we have the chops and the merit to be able to go out and actually raise money, and who's actually going to lend money to us, right? And why would they lend money to us? All of those kind of questions, those doubts in the back of your mind that kind of, hold us all back, right? And stop us from taking action. But I think that we've really learned that, you push through some of those, and you surround yourself with the right people, and you get the great education and the tools, and now you can move yourself forward in so many ways.
Awesome.
Yeah, fantastic. So with that being said, do we want to start to bring our guests on tonight and introduce them? Okay, fantastic. So it's our first time using this, everyone. So I think what we're going to do is, I think I hit the all panel button right here. So great. Everyone should be coming up. Fantastic then. So do you want to start doing our intros tonight?
Yes.
Yeah, fantastic.
Okay.
Great.
So first on the block, we have Marie Sept, who everyone knows and adores. So Marie actually has a really interesting beginning in terms of private lending. She started out raising money for the RE investors, flipping houses in Ontario. And she did that for a number of reasons. She says to, number one, get to know people, which is a brilliant strategy, to learn about lending and borrowing. She raised $1.89 million for them simply by explaining the opportunity. And that was March of last year. So awesome to have you, Marie. Thanks so much.
Hello.
So up next after that, we've got our good friends. We've got Dijon is with us this evening. That's Diana and John. And their focus is all about BRRRR strategies with multifamily. So they borrow the funds, they renovate these buildings, they bring up the value, they have their appraisals done, and then they pay back the lenders. They've got some great projects that they're working on, and I know they're going to share with us some of their tips, tricks, and strategies tonight. Welcome, guys. Great to have you with us.
Thank you. Bienvenue. We're
awesome.
Excited.
And next we've got Mike and Julie from Ottawa, rocking Ottawa. So their first ever raise was $1 million, so not chump change there. And as Julie says, if we can do it, you can do it, which I love. And she says the benefits of private lending are just infinite for both the borrowers and the lenders.
Yeah.
All right. Now, last but not least, tonight we've got Colin joining us from Coast to Coast Properties, and I think Nicole is doing bedtime, right, Colin?
Yep, she's putting the little ones to bed.
Fantastic then. So, I mean, Colin's got quite a great story, but they've used private lending to complete a number of different projects, including 2 single-family home flips, a 4-plex, a duplex, a semi-detached single-family home, 2 single-family home builds, and they're also going to be looking to be able to do more. So, a master of private lending, and I know a real guru with the registered fund. So, welcome, Colin. Great to have you here today.
So I'd love to start off. We do have tons of questions, and guys, we are going to kind of go through some general questions with the group, and then we do have some more specific ones. But if you do have specific questions, try to put them in the chat, and we'll do our best to get to them. But I'd love to start off by just each of you kind of talking a little bit about how you got started in private lending. So what was that? How did you feel before you did it? And how did you get yourself to that first opportunity where you were able to raise money? So Marie, why don't we start with you?
Sure. So like you, when I first heard about private lending, I thought, oh, wow, that's for the big guns. That's not me. That's probably big bucks. And then the more I started chatting with people, I realized that you could actually lend a very, very small amount. And being quite nervous about it, I looked at my little GIC in the bank, which was $3,000, earning about 2 cents a day. And I thought, I'm going to cash this and do a little test. And so I private lent out $3,000 to one of our Ignited members. And yeah, that was a great way to start, because I thought, oh, if I never see it again, it's only $3,000, but it's a good way to start. It was unsecured and just cash.
Nice. And then how did you pivot to actually raising money?
Oh, well, my first time was what you explained, raising money for the Ontario group. And it was just jump in with both feet and start doing it and learn as I go. And I would be asked questions and run back to our group and find out the answer, and then run back and answer. And so I learned a lot that way. And it's carried on from there. I've done, I think it's 8 or 9 lends out since September 2019.
Good for you. Good for you.
Great start, Marie. So let's hear from Mike and Julie tonight. So when you guys got first started, tell us a little bit about some of that experience for you.
Well, for us, we definitely started as lending out money, as being the lender, if you wish, and we did some private deals with the land development and some syndicate mortgages, and we saw the benefit and the value of our money growing as we sleep, right? Like the interest just accumulates and accumulates, and you're sitting at home doing your thing. So we thought, okay, this is amazing. And then this summer, we actually did, much like Marie, a little bit of a personal investing to a friend. They needed some cash. We did our first private lend, and we thought, you know what? We could provide these opportunities for our friends and colleagues. So we decided that we were going to jump in and do a raise for any Plex that we purchased in early January. We were scared, much like you, Joanna. We were like, we can't do this. This happens to the big guys, right? And we did what our coaches, like we got coaches. We made sure that we were working with experts. We had all of you to speak to when we had questions. You've all had that little email from Julie and Mike. Can we talk to you about? So we just made sure that we had all our ducks in a row and we knew what the next steps were. And we provided that opportunity for our investors. And let me tell you, it was fun getting that interest money when I was sleeping, but it was way more fun when I was depositing that interest money in our investors' bank account. There is nothing like that feeling, you know? So I am just so excited. And this is why I talked about the multiple benefits both ways. It's beneficial for us because at the end of this BRRRR strategy, we're going to be able to give back our investors their full capital, and they will have earned the interest over the year. And we get to then own this building straight out, right? So it's beneficial on so many levels. And the third benefit is that we get to resurrect a really old building that needs some serious TLC. So win-win-win.
That's a great share, guys. And you know, such a great message right there, which is not only are you being, you know, you're receiving a benefit by it. And it is a great passive way to be able to put your money out there and see it work for you. I mean, it's a fantastic thing to be able to hit the accept it on the e-transfer and see that money deposit in your account. But then at the same time, it's turning it around and reciprocating, right? Being part of that flow of money overall. So great stuff, guys. Great share. So let's hear from Dijon tonight. So you guys are savvy at the private lending game as well, but everyone starts somewhere. So where did you guys start off and what was that like?
Well, actually, we've been investing for 2 years now, and private lending was one of the first things we did, us lending our funds. We used our line of credit. And I think, yes, it was receiving that first Interact email transfer. It was like, wow, this is amazing. Like, why didn't we know this sooner?
Sometimes you forget about it and you're like, whoa.
I know.
And then knowing, I mean, again, you have to definitely vet the project, know where your money's going. But it just seemed too easy. And so we were private lending for a while. And then, yes, we do the BRRRR strategy. And initially when we started, we did use all of our funds. You know, we used our HELOCs and lines of credit to fund the down payment, renovations, all of that. And it worked out well. We got all of our money back when it turned around. And so with our next, you know, few other projects we did, they were a lot bigger in scope. So, you know, we have capital investors involved, where there was one project where we are the money partners and we have a portion of the capital, but we don't have all the funds. We didn't have the renovation funds. And same on another joint venture where we are the working partners. Our money partners, again, they didn't have all the renovation funds, but that's okay because the numbers work out. You build in the private lending, you build in the interest costs, and with our strategy, you can get a very good sense, and we are very conservative of what that value is going to be. And in our strategies, you know, getting all that money back and to be able to pay back the private lenders their capital, and they get to make a great return as well. And Julie, I can echo that. When I remember we first did our first interest payment to our borrower, like then they got that same comment, like, this is amazing. Like, I love this. And I said, oh, enjoy it. Yes.
Totally. I know we did the same thing. We've had, you know, a number of people who have been, you know, new to the real estate game, as, you know, watching us along our journey, people in our life, and, you know, who have joined us in our latest private lend. And when they received their first payment, they were just like, this is amazing. You know, why didn't we do this sooner?
I think we all have that same reaction when you just see this e-transfer pop up, you know?
Yeah, it's pretty great.
But it's addictive on both ends. It's addictive to get the response back from your investors and seeing, you know, their thrill and their joy about being able to actually make money work for them, right?
Yeah.
And so many never have.
It feels so good to help them. Like, here's another way to your financial position. Like it,
Awesome, guys.
Definitely.
So Colin, tell us where you got started, right? We know you do an incredible amount of private lending and you structure your deals fantastically, but tell us how you got started and how you got rolling.
Like Julie, we started with like using registered funds. We didn't have any cash. We used a lot of registered funds for land developments and syndicated mortgages, and just saw the real power of your money working while you sleep, just bringing in double digits. And like, this is amazing. And then we ended up having 2 unsecured lines of credit and thinking, well, what can I do with these? You know, the interest rate's a little bit higher, but we just reached out to the community, found a few other investors doing a few like kitchen renovations and burrs, lent it out, went through the process. And I think that's really important, that everybody on here is pretty much started by lending. So we've been on that side of the table. We know what to expect. We know the due diligence. We know how it works. And we just started lending out, you know, $50,000 for 2 different people. That's all I needed to get started. I got hooked on it. I liked it. We lent out more. Then we started exploring our options and what we wanted to do. And like many other investors, you experience this wall with the bank where, okay, you got 1 or 2 properties, you're done. And we're like, well, we need to raise some more money. So we just started with a renovation project, raised the budget. Great. Then we did a purchase of a single family home, 100%, loan to value plus the renovation budget. And and a lot of people talk about giving the money, but when you put out your deal, I still get very nervous putting it out there. Like, is anybody going to respond? How does everything look? But the response is amazing. The smile on your face, exactly. When you pay back people, they're so happy, and people don't understand, like, you're paying like 10 or 12 or 4, whatever the percentages you're paying. And I'm like, yeah, it's all about paying it forward. I'm getting money, we're getting the property, you're getting your interest, you're talking to your friends, and it's just a big circle. And as soon as you pay it back, it's almost like the next message is, what's the next project you got to do? So, I mean, it's everybody wins, everybody enjoys it. And these are not things that people normally talk about in mainstream. So once they get into it, they get excited and it just starts rolling. And I mean, we've had tremendous success on, we haven't done a big multifamily yet, but we've been raising a lot of money on single family homes or duplexes or renovation budgets. So private lending isn't just about raising a lot of money. It's little projects, diversifying. We did a land we purchased land today, and I'm just going to do the form after this meeting for a new investor, and using registered funds. And it's just It's fantastic. And the learning process is great. Like, here's how you move your money over. Here's what a trust company is. Here's where the lawyer's involved. We like to hold their hand and go through the process, and people really appreciate it. And it's just a fantastic relationship you build with these people.
Totally agree. And I think, sorry, were you going to say something?
No.
Okay.
Joe can always tell when I'm ready to talk, right? I think and then she like puts the brakes on me. She's like, hold on a second here.
So one of the questions that I've seen come up in the chat a little bit, and one of the questions that I think a lot of people have is why private lend versus joint venturing, right? So Marie, maybe you can talk to your experience there in terms of why would you do a private lending deal or like raising money versus doing a joint venture?
Interesting. Well, there's different strategies you can use, but like with Dijon, with their BRRRRs, doing private lends to initially renovate your house and then refinance it is a really great way to pay for those renovations. When you refinance, you can pay everybody back, and then you can add a JV partner. If you do it initially and you're getting a mortgage, then you have to deal with the banks and refinance. Some people really like to do the short term. They don't want to do a long-term commitment of, depending on where they are in their life. And so then private lending can fit into their long-term or short-term goals.
Yeah.
Yeah,
and I think that's a really good point. Is I think there are a lot of people out there who want to sort of reap the benefits of real estate without actually having to be in a long-term commitment, but they want to see the benefits of getting their money to work, more than it is currently sitting in the bank.
100%.
exactly. A JV agreement is a completely different thing than an agreement of a lender and a borrower.
Yeah.
Yeah, you could almost liken it to, holding hands versus, getting married, so to speak, right?
Yeah,
The joint venture is you're entering
into.
into, that's an agreement for a period of 5 years. So it's not to be taken short term, and it's not to be taken lightly. And, there's also a sharing there of debt and responsibility and liability. And, some of the benefits of private lending is that, as that person that wants to be able to invest in real estate and get a great term, my term is shorter. I could do 6 months. I could do 1 year. I can start to cycle that money. The other one is that I'm not incurring a lot of debt to be able to do that, right? I'm not going out and grabbing a mortgage, right? And then, qualifying for a second or third mortgage or whatever I might be looking for. So there definitely are some really good ones. What I was going to say, Hannah, is we got some great questions coming up right here. Yeah. Right. So if you want to start to flag some of these, right? But I also want to open it up for everyone. So we've talked about, and Colin made a great point, which is, almost all of us said the same thing here, which is we started off, which is lending some of our funds out, getting comfortable, lending a little bit of money out, getting that experience, understanding how it works on projects, or, just understanding how the lending experience works. And then we started to turn around and look at the opportunities of doing money raises. But let's just speak to some of the money sources out there, which is sometimes a little bit, unknown for folks. Where does the money come from, or how can I actually access some capital to be able to lend it out? So I want to open it up. If anyone who wants to jump in on this, ideas and sources of funds that people can use to be able to lend out and make money.
Sure. I mean, people have their savings. People they get a HELOC. They refinance their home and get a HELOC. Or they're implementing the Smith maneuver, another fantastic strategy. People have registered funds, and a lot of people ask me about registered funds, and they're not quite sure what they are. So they're the accounts that are registered with the government. So you'd have your TFSA, your RSP, your RESP, your LIRA, RIFT, all those kind of things. They're all accessible to hold, to do with private lending through arm's length mortgages. You just have to deal with the trust company. So those are some of the things that people don't necessarily think about as being accessible. And, I used to work at a job and I had a pension, and I've left that job and now I have a LIRA. So I have a, $20,000 LIRA sitting somewhere doing something that I've talked to people and they don't even know what they're doing or how much they have. And you dig into it and they look into it and then they realize that there's some potential there. So there's lots of sources like that we look at. And like I said, when we first started, unsecured lines of credit, yes, they're higher, but even if I'm paying 4 or 5 or 6% and you're lending out at 10 or 12, you're still making that spread. So, I mean, it's all about having every penny working for you. That's something that we probably believe in.
And you're doing nothing.
Yeah.
So say it again there, John. What's that? How much work are you doing?
You're doing nothing.
And you're also, to Colin's point, right? When you're going into lines of credit, right, you're using other people's money to be able to lend out, and you're creating passive income for yourself on that monthly or quarterly or annual basis right there. I see Danielle's got a question, which is what's a lira? So I believe liras are US based. No, are they
They're
Canadian based?
locked-in registered account. So if you have a pension and you leave your job, they'll convert it in part of it into a lira. So my wife, she was a teacher, and then when she left the school board, she had it converted into a lira. So they paid out some, and the rest gets locked in. It's locked in, essentially, is what it stands for. But you can deal with a trust company like Olympia Trust. They do accept liras, and we've actually lent out Nicole's lira as well. So
fantastic.
Awesome. So one of the other questions that I think a lot of people have and that we wanted to put out is like, what's the average rate of return for private funds? And this is something that I think I think it's based on, the answer is whatever you're willing to pay,
well,
right? But I mean, there is average.
Let's break that down a little bit. So let's talk about secured and unsecured on that one. So let's talk about unsecured funds, guys. So typically unsecured funds, you're doing on a promissory note or a general securities agreement, something along those particular lines. But for the panelists here, what do you guys typically offer when you're doing unsecured funds? And let's talk about terms and amounts that you generally might be looking for. What about Mike and Julie?
We can jump in. Good cue there, right? We offer 12% on our unsecured lens, but I've heard that it can be anything, like you said, Joanna, be anything between 10 and 16, or the sky's the limit. It really is whatever the market or the people are willing to, or what the project can afford, right? It's like you said, Colin. If you can make an infinite amount of returns, then the sky's the limit on how much you can give back to your investors. But we've been offering on the one, we've only done the one raise, and we've offered 12%.
12%. And sorry, you said the minimum amount that you usually look for?
It's between 10 and 16 usually is what we've heard in the market.
Yeah, fantastic. What about for Dijon with you guys when you're looking for unsecured funds and that sort of thing? Give us an idea. What are you typically offering folks?
So we've got unsecured, and it's ranging from 12 to 14. And as Julie said, it depends on what the project can afford.
Yeah.
So we've done 14 because again, based on what we know that it's going to appraise at afterwards on our apartment building versus our other property, we did 12. And for that one, when we appraise it, there is money left in the deal, but that's for that's what our capital and our money partner is aware of and knows. So we've baked in that cost. And so that for that one, we've lent out at 12%. So it really does depend on what the deal can afford. And we obviously like to give as much as we can and make it a win-win, but we really have to work down with the numbers.
Yeah, and I think that's the great point. It's really what the deal can afford. And some of the questions I see coming in, which are, how do you find people that are looking for a deal? And if you are a lender, how do you choose? And I think, from, us all having experience on the lender side, from our point of view, it comes down to two things. Obviously, the deal. You have to, have confidence in the deal. You have to understand all the ins and outs of it. But it's also the borrower, right? It's the people. It's who do you connect with, and who do you have the same values as? Yeah. And as Ray said, I think a lot of the times the lenders that we've had, we have been pleased to see that once the first lend is done, they're like, what do you have next? What's coming up? What's the next project? Because that trust has been built, and they've got their money and it's back and it's safe, and they've had their interest payments and they're happy. And so they're happy to keep it rolling. And that's such a privilege. Like, that's a real honor. We take that very seriously, but, I think that's it. And to anyone out there, I think, who does have, money that you're starting to think about getting involved, I would say one of our recommendations would be just get engaged in these Facebook groups, get engaged in the Fearless group, get engaged in, any other real estate groups, and get familiar with the people and ask questions, and, just build your network. And through that network, you'll find people that are doing projects, because they're everywhere. They're everywhere.
Okay, I'm going to jump off because you made a couple of good points, but we got a good question right here. And I see in the chat that it has been answered by a few folks, but Marie, right? So Sydney's asking a question right here. The difference between secured and unsecured. Tell us a little bit about that.
So a secured lend is secured against the property, so that it's done through a lawyer, and there's a caveat against that property. Unsecured is not, so that would just be a promissory note that you've both signed, and it isn't connected to the property at all.
Excellent, fantastic. And then I'll just piggyback that with Mike. Paradis asked a good question right here. So Colin, I'm going to throw this one over to you right here, which is, if you're lending unsecured, do you typically put a lien on the property as well? What are your thoughts on that, Colin?
No, it's unsecured is you do not do that. When you do secured is when you have a lien on the property. So you go to the lawyer will draft it all up, and then you'll be put onto the mortgage there. That's secured. And typically the difference between secured and unsecured is you'll typically get more interest. You'll make more money on unsecured because there is a higher risk, but there is a promissory note or GSA, so you do have some backing and legal action in that regard. But with more risk comes more reward typically. So
isn't that a superhero line?
More risk, more reward. No risk and no reward. Wherever it goes, right?
Something like that.
So Colin, talk to us about the importance of actually getting to know the people that you're working with in terms of borrowing and lending. Is it something where you just have a first phone call and then it's like, let's just do a deal? Or do you actually have a phone call with them? Is that important at all?
We spend a lot of time building up our investor base and networking a lot. We put a lot of information and give back to the community. We share a lot of information. People really resonate with that. And it's interesting because a lot of people that reach out to us reach out to a lot of people on the panel as well. And we have discussions and they ask us about other people. So like-minded people, positive attitudes, building up their relationship and trust. And you can see these people here on the panel as well. We all kind of bring that to the table, and it's all about trust. So we typically ask people to review, look at us, ask questions, look on the boards that we're on. We'll have a Zoom call if we can, because we can't really meet in person right now, unfortunately. But those calls range between an hour to about 3 hours for an initial conversation. We dig deep into their why. We dig deep into how private lending, if this is the case, will help them achieve their goals. And then, we may have a deal or we may not, but we keep them in mind when we're looking at our deals and say, like, this one has a return that they only want secured. This is their first deal. And, we kind of educate them as we go. But building that trust and relationship is a long road, but it definitely pays off, and you get repeat investors coming back and word of mouth and reputation.
Yeah.
Super important, Colin. If I could just piggyback on that, we made a mistake. And I'm going to talk about it because we can all learn from mistakes. One of our investors, he was clear from the beginning that he wanted secured investing, and we weren't quite sure about we knew about the difference, but we were trying to make it work. It's like trying to fit a square peg in a round hole. We were trying to make it fit, make it work. We spent a lot of time. And in the end, he still wanted secured funds, which we couldn't offer in this particular instance. So what we've learned is that we need to listen to what our investors need and what it is they're looking for, and to really be respectful of that. We are here to present an opportunity that helps them, right? And if our opportunity doesn't help them, then there'll be another opportunity that will probably better align with what they need, right? And so that was a hard lesson learned for us. Just don't try to force it, right? Just be what it is.
Yeah, and they have to, you have to be able to sleep at night lending your funds.
That's right.
No one's putting a gun to your head, and I truly believe you need to do your due diligence on the borrower ask your questions, and the deal is very important. And we're willing to share whatever is being asked of us. But that's even for us when we started private lending. The first thing was trusting, and there's very few that we would actually lend to because we really have to trust those people and the projects and what the money is being used for.
Yeah. That is a perfect segue into the question that Sam Lee has posted here, and that one. So let's talk about, when you're lending your money out and it is unsecured, what kind of protection you should be looking for? So I want to lend to you guys, and you've got a great project and that sort of thing. What should I be asking for? How do I know that my money's secured? What am I looking for?
Well, that's the big one. With us, where we're doing unsecured, that is the risk. And remember, the risk is, yes, you could lose all your money, but that's why you're doing that due diligence. That's the worst case scenario, and that's not going to happen. That's why really trusting what we do, our experience, our reputation, our projects. Do you guys hear an echo, or is that just me?
A little bit.
A little bit, yeah.
A little bit. But keep rolling.
Yeah.
It's
Okay.
still clear. Go ahead.
Yeah. Okay. Whatever. We'll keep going. So on unsecured, we use a promissory note, which is really just a document that sets out the terms. If anything were to happen, you can take legal action on us. We have this written in a document, and then we do also offer the general securities agreement, where, it's saying that you have entitlement to our assets if something were going to go wrong. And right now, with our initial properties, John and I are still personal. So we have a lot of risk on the table. We've got our personal assets that you can claim, which is our home and our investment portfolio for the first 3 that we've done.
So that's a lot of risk that you guys are putting up. Like that's nothing small, right? So
no, it's not small. And on top of it as well, the deals we've done is, like I've mentioned, we've got a JV. So we've got a money partner who has a lot of the funds, down payment, closing involved. A bit of renovation, and we are lending for part of the renovation. So there is also a sense of security of a large chunk of capital we have in our deal. So if we refinance, if something costs a little bit more than expected, or the market cooled or whatnot, the investors are always going to get paid first. That's the bottom line. And so it's the capital partners that would have their money left in, but they know the deal. That's why they're an equity share in the partner, because they have ownership in this property as well.
It's always a strong vote of confidence when you have skin in the game, and you've got money into your own properties and your own deals. There's no doubt about that. I'll just speak to this question a little bit right here. So one of the things that Joe and I do when we're looking at our particular properties, the projects, and then when we're doing money raises, we develop multiple exit strategies, and that's one of the ways that we offer security for our investors, those people that want to lend to us. And we typically come up with a primary and then 3 auxiliaries. So in that, we know that things may change, right? I mean, the tides may go up and down, things may shift, COVID may happen, it may, who knows, right? It's a weird world that we're living in. So you've got to have some latitude, and you've got to have some outs, and it's really important. And I saw a couple of different questions pop up tonight, but is selling the project an option? 100%, right?
Yep,
Lenders got to get paid out. And if that means that, hey, it's been a year's worth of work to turn around and flip the property, then that's what the deal is, right? That's part of the responsibility that we take on.
And we present those options in our Zoom calls, as Colin said. When you have your Zoom calls with the lenders, you present all of those options so that everyone can see and understand that you've thought it through, and you've thought through all of the different things that could happen, and you have a plan for it. And is it your number one choice? No, maybe not. But there's always a way for the lender to get their money back.
And there's also a section like in the promissory note where if the borrower, there's a deadline, like we're going to borrow your money for X amount of time and we'll pay this percentage up to this date. But then it says if we go past that date, we'll pay, like one promissory note I saw, it was $1,000 on top of the interest rate, or 20% or whatever. So there's that extra coverage if they go past that date. You kind of hope they do when you sign those, when it's a good one.
So
Also known as the extension bonus, right, Marie? You're
Yeah,
like,
yeah.
extension bonus. Thank you very much.
Please keep
Right?
my money for a month. Yeah.
Slight delay during COVID, that's for sure. I mean, we've had some projects where,
Yeah.
things have slowed down throughout COVID. There's been delays.
Yeah, we did.
And, we're very thankful that some of the lenders have been very good to be able to say, yeah, I'll keep my money in the deal and keep it moving and keep it working. Because sometimes, I mean, honestly, why not? You know that the project's going well, you know that progress is happening, but sure, it might be a slight delay. And if it's going to be another 60 days and you can keep your funds in there while you're hunting for another deal, that's beneficial, right? And I think, as investors now, right, our mindset has gotten so much into this, which is lazy money. You just can't have it sitting around anymore. You have to deploy all of those little forces, right? If it's registered funds, if it's available lines of credit, whatever it may be, right? It's being able to understand how do you deploy that to be able to fuel your projects and create this passive stream of cash flow that helps your family, helps your lifestyle out, that keeps things running while you're running all the time to make it work.
And I think one of the other things that's interesting, as we were talking about sort of the flexibility, and if you can choose to keep your money in, or if you want to pull it out at the end of the term, one of the things that we offer in ours is it's generally a 12-month term. Sometimes we've done a 6-month for a shorter term, but we do say, like, we're all people, we're all investors, life happens. And if at the end of the day, something happens in your life and you need your money back, we simply ask for, 30 days notice to allow us to go out and find someone to replace your funds with. And I think that gives also a lot of confidence to lenders, knowing that, yes, it's a 12-month term, but they're not, their money's not, it's not like it's locked away in something registered. They don't have access to it. If they really needed it, they could get it back. And I think that's something that's been really helpful and has given a lot of confidence. So one of the things that we wanted to talk through too, guys, was like the actual logistics of how it works. So Colin, you have your Zoom call, you figure out that you've got an investor. They're like, yes, we want in on your deal. What you're like, yes, let's do this. Great. What happens? What are the next steps?
So once we've gone through the deal and everybody's happy and we're all set, the first thing we do is a letter of intent, which is just like a one-pager that will just say, our conversation said you're going to lend money on this project for maybe a renovation or whatever it's going to be for this percentage of money, for this percentage of time. And it's just very straightforward. So there's no surprises when we move to the next step. So I think that's very important. It's very clear. The next step is if we're doing, let's say, secured cash, let's say. The next step would be we typically do a deposit at that point to hold their spot into it, which could just be a small bank draft for $5,000, let's say, something along those lines. We give them all of our lawyers' information. We make the contact. We give them their trust account information and know that it's secured, so it's going to go through the lawyer, and they'll send the money directly to the lawyer via bank draft, for instance. The next step would be we do a promissory note, and that is the meat and potatoes of the lend. It goes over all the details, what's considered default, the parties, the dates, all that stuff. It's just more detailed than the letter of intent. And we advise everybody, if it's their first time, in particular for the first time, please take it to your own lawyer. Have them review it, have them go through it.
For sure.
Just know that every lawyer likes to have their say on it, which is fine. And just, go through it with them. I actually did that today. I spent about an hour and a half going through with some JV partners of ours over the changes that their lawyer recommended. And some of them were good and some of them we decided not to do. But we went through it all. It's all part of the hand-holding process. You go through it, everybody's happy, and then we sign off on that. And then you're approaching the date of sale. So we have them drop off the remaining of the funds to the lawyer through a bank draft again. And then on the date of sale, the lawyer will draft up the mortgage. They'll have their name on it. And it'll reference typically the promissory note for all the terms and conditions of that mortgage. We give them a copy of that on that day, so they have it. It does take maybe 4 weeks, 5 weeks for the land registry to put all that through. But then if they want, they can go and pull title and you'll see their name on it. So that's kind of the process we go through. And then we provide updates and everything as the project continues. And then on payout, we basically take the amount of interest they'll make. It's an annualized return. A lot of people ask us that question. If you're saying 12%, they're saying, oh, I'm borrowing for 2 months, I'm going to make 12%. It's 12% annualized. So take the amount you're going to lend. Yeah, a lot of people say like, you're going to make $12,000 in a month. I'm like, the project's not that good, maybe.
Those kind of deals you meet in the back alley, right? That's those 12%, right? So
just take all that, take the amount that you're lending, times it by, let's say 12%, divide it by 12 will give you your monthly, or divide it by 365 to get your daily per diem. And when I do my calculations, I laid it all out from the day you lent it to the day you're going to be paid, and then you give me a void check of where you want the money to be deposited, and we'll wire it or bank draft it over to you on that date. We pay all the lawyer fees as well. As the lender, you don't pay that, which is important. When we're using registered funds, there's more fees associated with that in terms of the trust companies charging you. So again, for me and what we do, we actually pay all that as well. So you just get some peace of mind that the interest rate you're going to make with us is the interest rate that you're actually going to take home at the end of the day. Yeah, so that's typically the process for secured that we walk through, and we use electronic signatures or Zoom calls and watch them sign, and or DocuSign, and we actually send a page instruction of the next steps, what to expect, what does this all mean, so they have a clear picture of that before they signed anything.
That's really awesome. And yeah, you guys are great with the secured funds. And I think, just that clarity of step by step, here's what's going to happen at the next stage. And here are the next few, things that we're going to need from you. Here are the timelines, kind of mapping it all out, making sure everyone is clear about, what's going to happen. It probably is very comforting.
And that's part of it, right? And for us, we're doing a lot of investing in New Brunswick. So the first thing we say is, do you have a Canadian birth certificate? Because the lawyer needs that in order to secure it. So that's something that's unique to that particular province, or a Canadian citizenship. And so it's just all those things that some people say, I haven't seen my birth certificate in a year, I got to go find it. Like, you have a few days or order it, So it's just setting expectations. You don't want people panicking at the last minute, right? It's all about helping them achieve that. And for something like Olympia Trust, a lot of people say, we're ready to go. And I say, are your funds there? No. Do you know how to get them there? And we walk them through the entire process of how to get them here. And for us, again, we don't accept money for registered funds unless you can show us that it's in your account. A lot of people say it's 2 weeks. We've seen 2 weeks, 4 weeks, a month, 3 months for money to get there. So just for us, you have to prove that the funds are there, and before we start putting them onto a project, because the last thing you want is closing date and the money's not there. So
that's it. Yeah.
No one wants that. No, definitely don't want that situation. That's for sure.
So that's a really great example, guys, of the sort of the step-by-step for secured. Mike and Julie, do you guys want to, for unsecured, it's a little less, sorry if you can hear our kids in the background. We stuck them in front of a movie and they're heckling. Unsecured is a little less complicated. Do you want to walk us through how you guys sort of the logistics behind that with your lenders?
Sure. It's very similar to how Colin has described it, minus the intricate details in between, right? So we do actually have that initial meeting, like you mentioned. We do the letter of intent. Depending on how far away we are from close, we didn't have to take a deposit on this one deal that we've done, but that's a really great idea if there's a long close, and then we follow up with keeping the investors in the know, keeping them at least send them some communication at least once a month to let them know where we're at. There's a loan agreement then followed up with a loan agreement which outlines all of the details. Of course, we recommend to all our investors to seek their own individual legal advice.
Yeah.
And once we provide the loan, we've actually even provided an example of the loan agreement without all the details, so that they can have that time to review with the lawyer before we it comes time to actually doing the deal. We just come time close to the closure of the deal. We, as you mentioned, Colin, we send them a request to send the funds through registered checks or bank drafts to the lawyers, and it all gets deposited. And actually, it didn't go to the lawyers; it went to our. That's, I guess, the difference. It doesn't go through a lawyer when it's
Exactly.
it goes directly to our bank account, and then of course the mortgage broker or the lender wants to see that the money's there for the down payment a few days before we close, right? So
Yeah.
That's one thing I'm going to say. People think bank drafts, you take it out, the money's gone, and you have it and you deposit it. Banks still hold it. They can hold it for 5 days or 10 days.
Yeah.
So if you're a borrower or a lender, just know that there is a hold. When you are depositing in a trust with a lawyer, they're going to ask for a photocopy of the deposit slip when you're at the bank. Just send it out. They'll be able to release it sooner. But if you're just doing like an unsecured lend and you're closing in 2 days and they're about to drop the money off, it will not be cleared in that time. So just be aware of that for everybody lending. Wire transfers are great, but they can be costly and they sometimes increase. Like if you're over 10,000, 20, it increases and get more expensive. But just know that there is holds on money. A lot of people are very shocked to hear that. So
yeah, that's a very good point. We had to do some negotiation with the banks to release the funds early.
Yeah.
Something I heard about with moving your registered funds to Olympia Trust, like a lot of people go to where they're currently holding their registered funds and tell that organization to send their funds to Olympia Trust, but it's much more effective if you go to Olympia Trust and ask them to go to your current holder and move the funds over.
That's a great
pulling them is way easier than getting those people to say goodbye to them.
Yeah, great tip on that one, Marie, and for Colin as well. Like a great insight there, which is always leaving buffer time. Right, the banks may choose to hold funds for reasons unbeknownst to us, just to be able to frustrate us at certain points in time. So Joe and I typically, when we're doing some of ours, we're always buffering in at least 10 business days until the funds are actually needed.
Yeah.
So, and we're really straightforward about that, which is why, because hey, banks sometimes can be squirrely, right? They can decide to put holds on funds, and you don't want to be at a close date where all of a sudden, it's time to be able to transfer those funds through, and you're a day short and a dollar short kind of thing, or a day late and a dollar short.
Something like that.
Yeah. So there was a question from Lee. I think it's Casey there. I hope I'm pronouncing it correctly, but how do multifamilies differ in the process? And I think part of that is just understanding when you're borrowing and then you're giving a rate of return and then you're able to pay people back. So maybe Mike or Julie or John and Di, you want to talk about kind of the mechanics on how that works with a multifamily versus a residential property?
I wouldn't say that it's necessarily different.
Mm-hmm.
I think, I don't know that it's really different. The process is the same, whether you're doing it personally or through a business, or doing it on like a single residence versus an eightplex. We have some friends. We've only done an eightplex with the raise, but we have lots of friends in this community who have used private funds for houses that they buy, they flip, and then they, return the funds to the investors, and then they own the properties outright. So the process to me is the same, unless I'm mistaken. But
I would agree as well.
Yeah, it's about the same.
Yeah,
It's not different. No, I don't see any difference.
Sorry, guys. We just had the kids going off downstairs.
Sorry. They were a little squirrely down there.
Honestly, after doing this tonight, I'm like, I've got so much more respect for the work that Corey and Tiff do. I'm like, it is cool. Even the panel here tonight, like this is the first time us doing this panel. So thank you to everyone. Honestly, this has been a really fun session for us to do tonight. And like we've been watching the ticker, 100 people. So we're pretty like just odd that you'd stay on and hang out with us for this amount of time. But the quality of the panel that we have here really speaks for itself too, in terms of experience the types of lendings that they do, the borrowing that's going on, and what they've got happening. So I'll just bring it back to a couple of things, which is, we've talked a lot about the mechanics of the private lending tonight, difference between secured and unsecured, some of the interest rates and the terms that are being offered out there, the types of projects that people work on, why this is such an important tool to be able to utilize in your real estate investing, and what it can do for you. Now, I don't think that it's a tap that you just go and you turn on the private lending tap all of a sudden, right? I mean, Colin has spoken to it, Marie's spoken to it. Everyone has spoken to it tonight, which is it's about developing relationships, developing some trust, showing your quality out there, having some risk involved. I mean, as the managing and the working partners, we're putting up our time, our properties, our equity. There's a lot that puts on the line in terms of risk that it all happens, right? And I think, and I know for us and as well for everyone else on the panel, the primary is always first and foremost that the lenders get paid back first. You're the fuel, right? You're what is able to be able to take the project and move it forward and get everything happening. Without you guys, it really doesn't happen. So for us, we're extremely grateful. And I think that the truest compliment is when they come back and they want to reinvest, right? And it's like, it's been a great relationship, let's keep it going kind of thing. Or it becomes a lot more fun when you can start to work within a community like ours here, and that other people have got great projects going on. And like Colin said, when you're having a chat with folks, you can say, oh, I know that couple, they're doing some great work. Or I know that person, they're doing some awesome stuff. And yes, sometimes I say to myself, well, we had the money, I'd be like, Joe, we're lending on that project right away. Yeah, lots going on there. So we're getting to the end here. We're about 7:55. I know we've covered a lot. There's so much to cover in private lending. There's no doubt about it. And there's been some really great questions that have come up for on the chat tonight about trainings and mentorships and coaches and that sort of stuff, right? So I would say if you're part of this community, stay in this community and continue to reach out to the great people that are here. There's always the opportunity to take the next step and go a little bit further, right? Which is getting in the Ignited community. And as a member of the Ignited and the rest of the panelists, we could all speak to the benefits of what that's done for us and our portfolios and our knowledge base and just the connections that it's had. So I would say, private lending is fantastic, but the best investment you can make is the investment, everyone.
In yourself.
In yourself. That was good, guys. Thanks so much.
But yeah, I mean, I think we all have a ton of stuff on the go, and in the last few minutes, just maybe let's go around and talk quickly about maybe say like a minute each on like what you guys are working on now, and if you have any opportunities, throw them out there. So let's start with you, Marie. What are you up to now?
Okay, so just finishing a burr in Camrose, converting a duplex to a suited duplex. I was always saying fourplex. I got corrected. Looking forward to paying back all our private lenders. That's exciting.
Nice.
Looking at another project or two in Edmonton and also on the island. So if you want to talk, I'm glad to chat with anybody.
Awesome,
Marie. Congratulations on the
stuff.
project. And, it is a great feeling to be able to pay out those lenders and get new ones as well. So that's awesome. Island, you're talking Vancouver.
Vancouver Island. I'm in BC. Yeah.
Okay. Awesome.
The island. Yeah.
Okay. So that's going from west to east. Let's talk to Mike and Julie in Ottawa. What do you guys got going on right now? What's happening? What's coming up?
So we're finalizing. We just started the construction on our 8plex, and so we're hoping that in the next 8 to 12 months, hopefully 8, we finish the renovations and we pay off all our investors. And we actually have an opportunity. We've raised all the funds for this project, but one of our investors was in for 6 months because, as you said earlier, there's flexibility. Some people want shorter terms. So we are looking for for one investor to potentially join our project. So if you're interested, please reach out. And we're always looking for new properties.
We're in Ottawa. We look in the Banlieue where there's new rejuvenation of the area and there's intensification that's going on. So there's lots of opportunity that are coming up in the near future.
Absolutely. So lots of things to come, and we're excited.
Way to go.
That's great. Congrats.
Way to go. All right, Dijon, over to you guys. What do you got going on? What's happening? What's on the plate?
Our triplex rebuild is almost done. Like we've got tenants coming June 1st, and you know, when we got this in July, again with working, we worked with the ARV at that time, but this market has gone a little bit crazy since last July. And I don't want to, you know, get my investors a little too excited, but we might be, you know, let's see what that ARV is going to turn after, yeah, so that they could get more of their money. And pay out our investors. We're currently still working on our 13-unit building on kind of the next set of renovations. So, you know, looking for again, private funds on that for the renovations. And we've got a project in the works. It's a development. It's actually 10 to 12 units. We're still trying to hash it out with our architect, but for that project, we will be raising capital as well for the renovations, but we are not at that stage. We probably still have a year of planning of this development to even begin with, but just what's in the pipeline.
Guys.
Awesome.
Yeah.
Wow, good stuff.
Congratulations, guys. We're thrilled for you, especially on that triplex. Colin, my man, bring it on home. You got so much going on. You got lots happening. Tell us what is going on with Coast to Coast right now.
So yeah, we actually just picked up an off-market side-by-side duplex in downtown Halifax. It is our dream property. It was on our original vision board when we started back in 2016.
Wow.
We love it. If the pigeons were paying rent, we'd be rich. We basically left alone for a few years, no water or anything. We just had our appraisal go in. We're dealing with architects and design and planning and permitting and structural engineers. So we're closing end of this month. It's going to be tight to get financing with a traditional lender. We're looking at the credit union. So I think our plan and strategy is going to be raise all the money privately for the purchase, and then we'll look to get some traditional financing maybe a month or two down the road once we can do the ESAs and everything that we need to do. So we're definitely looking for money on this. We're actually just probably about to announce it today or tomorrow, so you guys get first peek at it and first crack. So please reach out, myself or Coast to Coast Homes Canada, and we can share a pro forma, learn a little bit about us, learn a little bit about you, and see if we match and can work on this project in Halifax together.
Awesome. Congratulations.
Congratulations, Colin. We're super thrilled for you guys.
That's awesome.
And thanks for hosting. You guys have been amazing hosts. So I think, you know,
Yes, we have.
Ray and Joe.
Do this again.
Great job.
Same time next
time. You guys knocked it out.
All right, guys. Well, I'll do mine, and then Joe can totally wrap it up. But I just want to say thank you to everyone, our panelists, for coming on tonight, spending your time, sharing your knowledge, your expertise, your information, helping to educate the entire community here. Thank you to the whole community for coming on and joining us tonight and hanging in, guys, for an hour and a minute. You've been hanging in and listening to us. So you totally pumped our tires tonight. So thank you so much for that. I just want to say a big thank you to Corey and Tiffany as well for reaching out and giving us this opportunity. We were just thrilled and honored, and I hope that we've filled the boots. Maybe like 1% is all I really shot for tonight. So go ahead, hon, bring it home.
Yeah, again, just want to say thanks, everyone. I think if anyone out there has any questions for anyone on the panel, please reach out. If you don't have our contact information, hopefully Nin can put it up for you guys, or you can just reach out to Nin and she'll get you whatever you need. But hope this was helpful for some. And there's tons more we could talk about it, but who knows? Maybe we'll do a round two in a few months.
You never know.
You never know.
All right, everyone. Enjoy the rest of your
guys.
Tuesday night.
All right.
Bye. Thank
Have a
you.
great one. Bye now.
Thanks a lot.